As September finishes out its second week, things have been pretty calm around Main Street and Wall Street. There's been a noticeable quiet period since August, which is not typical for this time of year. In fact, this week marks the one-year anniversary of one of the scariest stretches in U.S. history. Joe Krier, president of Krier Wealth Management, is here to discuss what's going on. Last year, this is when all of the tumble started with the economy, didn't it?
I was driving down 95 heading to a investment study group meeting in South Florida and just listening to CNBC on the radio, and it was just crazy what was going on. And, you know, the panic sounded almost like September 11th on Wall Street. Just crazy stuff going.
Well, let's take a look at the timeline of the U.S. market meltdown, exactly what happened on September 8th. I know this is tough to read, but the government bailed out Fannie Mac and Freddie May. I'm sorry, I had that backward. Thank you.
And if they would have let those two collapse, it could have led to a major domino effect. And it is hard to read this graphic, but the next thing that happened was letting Lehman Brothers go under, and that sort of started the ball rolling. And the Feds realized after the repercussions of letting Lehman go under that they couldn't let AIG go under. And all of a sudden you had every 3 days you had a major bank or a major investment firm coming up to the brink of disaster.
There it goes. September 16th, the government bailed out AIG for $85 million. 3 days later, President Bush announced his plan for economic bailout. And then on September 29th, Congress did not pass the president's economic bailout plan. Not at that point yet.
Yeah, that's when things got really ugly at that point, because the U.S. taxpayers were sitting there kind of saying, my gosh, Congress is just going to sit back and let this go by. And they finally did pass that bill 3 weeks later. That's the one that grew from, I don't know, 100 pages to 900 pages with all the earmarks in there. And it was the beginning of stabilization that we're still kind of grasping for as we speak today.
So where are we in relation to where we were a year ago today?
Well, a year ago today it was crisis, and we were right up against the edge. And some people say there's still crisis looming under the surface here, and that perhaps we're being ridden along by sort of a sugar buzz that is in the form of government stimulus money. Things have stabilized. We're not seeing, weekly disasters happening. So it is kind of just a calm period that we're in.
And September typically is not calm.
Right. September and October have been the most volatile months of the year.
Why
September is the worst month. Nobody can really put their finger on it. It just seems that summer gets quiet. Wall Street goes to the Hamptons or on vacation. Everyone comes back after Labor Day and says, oh my gosh, we better get back to work. And then everybody tries to make things happen, and the market starts flipping all over the place.
Well, that's not really a good reason, is it now?
No, it's not. It's not concrete, and that's part of the problem. And this time around, everybody's kind of looking back and saying, well, gosh, they're declaring the recession over, but we still see other shoes to drop out there, and that makes us uncomfortable.
You still have some other issues that investors need to be looking out for. So let's take a look at September of 2009. You believe we've got short memories?
Yeah, short memories are a little bit of an issue, and the U.S. is famous for that. What they say is, in the short term we learn a lot, in the medium term we learn a little from our problems, in the long term we learn nothing at all. And people are so comfortable. I think we're in a little bit of a false sense of security here, how good it's gone the last 3 or 4 months.
We still have bank problems. Real estate is slow to recover. Unemployment.
Unemployment's out there. No matter what you can talk about, it's still not recovering. We still have people losing their jobs.
Is there a safe place for investors right now to be stashing the cash?
Well, I think it's a good time to reassess, and people that lost a lot of money last year, they've seen some recovery. I don't want anyone to be lulled into a false sense of security here, because what happened last September, perhaps it won't be that bad again, but some of the things that caused the market to go crazy last year, they're still out there, and there is still credit problems. There's still unemployment. We just have to be careful. It's a great time to reassess.
All right, Joe Krier, president of Krier Wealth Management, here to talk about where we are from a year ago today.